Hello everyone, welcome back to our YouTube channel. We are PGN Accounting Group. We bring to you our first actual YouTube video with content that we hope brings you value, that you learn something from it, and that you can implement it in your life. But before we get into the content of the video, please hit the subscribe button. It really helps out our channel. It helps us expand our reach to inform more people. And it also will enable you to get notifications of any future videos that we post. Also, please visit us at pgnaccounting.com, where you could get information on the different services that we provide our clients. And also, you will see our contact information where you can reach out to us to set up a free initial consultation. So this video is called Top 5 Write-Offs for W-2 Employees. What we're going to be talking about today are the top 5 write-offs for W-2 employees. W-2 employee is just your standard working for a corporation or for a company, whether it's hourly salary, you get a W-2, and there's nothing really to it. It's very plain, but the majority of people are W-2 employees. So we're making this video because the number one expense in our lives are taxes. And any strategies or ideas that we can implement that helps us reduce the amount of taxes that we pay, then I'm all for it. So these are the topics that we're going to be going over today. Number 1, standard deduction. We're going to be going over itemized deductions, retirement contributions, health and dental, where we're going to be touching on insurance premiums, health savings account, HSA, the child tax credit, and also please stay tuned until the end of the video where we're going to be talking about another topic that's not a write-off per se, but it's definitely going to be beneficial into your life if you're able to implement it. So please stay tuned until the end of the video if you want another strategy to save taxes. So topic number 1, the standard deduction. It's your plain vanilla deduction. Every single taxpayer receives this deduction. You don't have to earn anything. You don't have to meet any thresholds. Every single person at a bare minimum is allowed to take the standard deduction, which reduces your income dollar for dollar. So if you made $100,000 in W-2 wages and you are single, then you're able to take $12,950 as a deduction, and you're at $87,050 that will be taxable income, where then the tax rates apply to that $87,050 instead of the $100,000 because you were able to take the standard deduction. So what are the thresholds for the standard deduction for 2022? If you're single, it's like I just said, it's the $12,950. If you're married filing joint, it's the $25,900. If you are head of household, it's $19,400. Now, write-off number 2 that's available for W-2 employees is itemized deductions. So you can either take your standard deduction or you can take your itemized deductions, but at a bare minimum, you're able to take the standard deduction. But if you have enough itemized deductions that are more than your standard deduction, then it is actually more beneficial to you to take the itemized deductions because it reduces your income more than the standard deduction. So what are examples of itemized deductions? There are medical and dental expenses. This does not include your health insurance or dental insurance premiums, which we're going to be talking about later. This is if you go to the doctor and you pay out-of-pocket cost or a copay, or you go and buy some prescription drugs. There are certain qualified medical and dental expenses that you're able to itemize. Also, an itemized deduction is the taxes that you pay, whether it's the state or local taxes, your general sales tax for those states that don't have a state income tax like Florida. Also, you're able to deduct your real estate taxes and personal property taxes. Unfortunately, there is actually a maximum amount of state taxes and just taxes in general that you're able to deduct on your itemized deductions, and that is a maximum of $10,000 of taxes. So if you paid $10,000 of real estate taxes, you paid $3,000 of general sales tax, and you paid another $5,000 of state and local taxes, like state income tax, then you're at $18,000 of taxes paid. But unfortunately, you're only able to take up to $10,000 of that taxes and add it to your total itemized deductions. You're also able to deduct interest that you pay, whether that's on your home mortgage. Also, the points that you pay to get that mortgage, you're able to deduct. You're able to deduct the mortgage insurance premiums. So it's not just the mortgage interest, but also the insurance premiums that you pay per month. And investment interest, which includes margin interest. So if you're trading on margin, the interest that you're paying is actually included and deductible as an itemized deduction that will reduce your W-2 wages. Now, I do not encourage trading on margin. That is for a completely separate video. But if you do, you're able to deduct the margin interest that is being paid. Also, you're able to deduct and add to itemized deductions gifts to charity, whether it's cash or non-cash charitable contributions to a 501c3 nonprofit organization. So whether you give cash contribution to your church or your other religious organization or another nonprofit, then you're able to add that to your itemized deductions. Also, the bag of clothes or other household items that you drop off at Goodwill, you're able to deduct the fair market value of those goods. Make sure that you get a receipt or a letter from these organizations or Goodwill so that you could have it for your records if the IRS ever comes calling. So we have an example over here of Schedule A, which is where you list your itemized deductions for when you file your individual tax return. So as we mentioned, this is where you're going to take your medical and dental expenses. There are threshold limitations, so please contact your CPA when you're filing your taxes so that you get an idea of how much you can deduct of medical and dental. In this section, you're going to be taking and listing your taxes paid. Again, that's capped at $10,000. Over here is all the interest that you paid, which includes more insurance premiums, points, which includes mortgage interest, points, insurance premiums on the mortgage, and margin interest. And then gifts to charity is included in this section. The third write-off that is available to W-2 employees is retirement contributions. The different retirement contributions that are available to a W-2 employee are your standard 401k, your Roth 401k, your individual retirement account, IRA, or your Roth IRA. So 401ks and Roth 401ks are with your employer. So you're going to be contributing to these retirement accounts and making these contributions via your W-2, via your payroll, your pay stub. So please contact your employer on setting up that if you haven't already. But the IRA and the Roth IRA are separate from this, but it's another write-off and another retirement vehicle that you're able to contribute in addition to your 401k or your Roth 401k. You don't have to pick one or the other. You're able to do both. So to maximize the amount of retirement contributions that you're able to make, you can max out your 401k and you can max out your IRA, which I highly recommend if you're financially fortunate enough to do so. So the 401k and the IRA are the only ones that are pre-tax. What does that mean? So when you contribute dollars to a 401k or an IRA, you actually get a tax deduction when you make those. So you're reducing the amount of W-2 wages that is subject to tax. So when you make those contributions, those retirement contributions to a 401k or an IRA, you're saving on federal and state income taxes. Unfortunately, they do not save you on Social Security and Medicare taxes, but we do have a couple write-offs that we're going to be talking about later that will actually save you on Social Security and Medicare taxes. But if you make contributions to these retirement vehicles, then you'll be able to reduce your federal and state taxes substantially. Also, you're able to make retirement contributions after tax to Roth 401k or Roth IRA. However, technically this is not a write-off, but you will be saving taxes in the future. With pre-tax 401k and IRA, you're able to take that tax deduction now. However, those accounts will grow over time, and when you retire and you decide to take money out of these retirement vehicles, you will have to pay taxes later. So these are also called tax deferred accounts because you're deferring the taxes that you're going to pay in the future. You're saving taxes now, and you're going to be paying the taxes later when you retire and you take the money out. There is another option for retirement contributions and savings, and that is making after-tax retirement contributions to a Roth 401k and a Roth IRA. So these are the same and work similarly to 401k and IRA, where they are retirement vehicles. However, you do not take a tax deduction now. So you take your W-2 wages, you pay your federal and your state income tax on it, and those after-tax dollars, whatever is left over, then you make your contribution to these accounts. And the benefit here is that they grow over time, and at retirement, when you want to take money out, you do not have to pay tax because you already pay tax on that income when you first put it into these retirement vehicles. So you pay the tax on those wages now. So yes, this is a write-off for W-2 employees if you want to take that tax deduction now, or you have the option to pay the tax now, but you don't have to pay the taxes in the future, which I highly recommend to talk with your CPA, talk with your financial advisor, contact us, and then we could balance and see different situations. Should I contribute to a 401k? Should I contribute to a Roth 401k? Should I also do IRA, Roth IRA? We can help you make that decision and weigh which way you should be making your retirement contributions. Should you do 50-50? Should you do more to 401k and only a little bit to Roth 401k? We can help you make that decision. So the limits for 2022 of how much you can contribute to these different retirement vehicles are, for the 401k for 2022, the limit is $20,500. Or if you are age 50 and older, you are able to make a catch-up contribution, which brings your total 401k contribution limit to $27,000. These catch-up contributions really help those individuals that haven't really saved for retirement before their 50s and they're trying to catch up to the people that were able to save more before. These catch-up contributions are really beneficial for those people at ages 50 and up that are nearing retirement. The same contribution limits for a 401k is for the Roth 401k for 2022. So that's $20,500, $27,000 if you're 50 and older. The 2022 retirement contribution for an IRA and a Roth IRA are $6,000 per year, or $7,000 if you're age 50 and up. So there's that extra $1,000 catch-up contribution for people 50 and older. As I said before, you are able to contribute to a 401k and an IRA. However, you are not able to contribute $20,500 to a 401k and $20,500 to a Roth 401k. You are not able to do that. This limitation is combined on your contributions to 401k and Roth 401k total. So if you want to split it 50-50, you could do $10,250 to a 401k and then $10,250 to a Roth 401k. Or you could do $19,000 to a 401k and $1,500 to a Roth 401k. However, you cannot go over that total $20,500 limit. The same goes for the IRAs and the Roth IRAs. There is a $6,000 total limit that you can contribute to your IRAs. So if you want to split it 50-50, you could do $3,000 to your IRA, $3,000 to your Roth IRA, or do $5,000 to your IRA and only $1,000 to your Roth IRA. However you want to do that, you are capped at $6,000 total. Now, if you want to contribute to both your 401k and your IRA, you are able to make that $20,500 plus the $6,000. So you're able to contribute $26,500 in 2022 to your retirement accounts. So it's really beneficial. If you want to reduce your 2022 W-2 wages, you can reduce it up to $26,500 if you max out your 401k and your IRA retirement contributions in 2022. The fourth write-off available to W-2 employees to save on taxes are health and dental, and specifically the health insurance and dental insurance premiums that you pay through your employer. These are not included in your itemized deductions, as we said before in write-off number 2 to reduce your W-2 wages. These are not included in itemized deductions as we discussed earlier. These are separate. So these are not your copays. These are not your prescription drug prices that you're paying at Walgreens. These are the actual insurance premiums that are coming out of your W-2, your pay stubs, on a weekly, bi-weekly, or monthly basis. These help reduce your W-2 gross wages that are subject to everything: federal, Social Security, Medicare, and state taxes. So the 401k contributions, the retirement contributions, yes, they save on taxes, but they only save you on federal and state income taxes. They don't save you on Social Security and Medicare. And that's where health and dental insurance premiums are so powerful. They help you save on federal and state income taxes, but also save you on Social Security taxes at 6.2% and Medicare taxes at 1.45%. This is a huge tax savings to W-2 employees and really helps you write off how much of your W-2 wages are subject to taxes. So we have here an example of a W-2 from PGN Accounting Group, which a nice little reminder to please hit the subscribe button and helps us expand our reach. So we have here an example of a pay stub from PGN Accounting Group. This is a standard pay stub from ADP, which is a payroll service provider. A lot of people have this, so I use it as an example so that people are more familiar with this layout. So you have here your wages. This person is an hourly wage earner, so they have their hours, their rate, and then their total wages. So as you can see, they made $23,000 in 2022 year to date. They have their federal taxes, their Social Security taxes, Medicare tax, and this person is a New York resident, so they have their state income tax in New York. And then over here you have your 401k, your health insurance, and your dental insurance. So these are your deductions that are coming out of your W-2 wages, out of your pay stub, that are reducing your gross wages. So as we discussed, the 401k only helps you reduce how much federal income tax and state income tax that you pay. However, your health insurance and your dental insurance help you reduce your federal, Social Security, Medicare, and your state income tax. So this is where they're going to be, and you want to make sure that it's pre-tax. So these are your pay stubs, whether you get them weekly, bi-weekly, monthly, semi-monthly. These are going to show how much wages you got during that pay period. But at the end of the year, you get a W-2, which looks like this. You're going to have your W-2 wages that are subject to federal taxes over here in this box 1. You're also going to have your Social Security wages that are subject to Social Security taxes. You're going to have your Medicare taxes over here in box 5 that are subject to Medicare taxes. And then down here is the state portion. So you're going to have your state wages that are subject to state income tax. So retirement contributions and your health and dental insurance premiums, they're going to be detailed over here in box 12. They're going to be broken out, whether it's 12A, 12B, 12C. They're going to be separated so that you could see what are retirement contributions and what are health and dental insurance premium deductions. The health insurance and dental help reduce all three of these boxes: your wages that are subject to federal, and it helps reduce your Social Security wages that are subject to Social Security tax, and it helps reduce your Medicare wages that are subject to Medicare tax, but it also reduces your state wages that are subject to state income tax. So the health insurance and dental insurance premiums that come out, they are really powerful write-off for W-2 employees because you save on all four different types of taxes, whether it's federal, Social Security, and Medicare, and state income tax. Another write-off that is related to health and dental is the health savings account contributions. So this is only available if you have a high deductible health insurance plan. Please talk to your employer about their insurance offers and different health insurance options, especially now that the enrollment period is coming up. You might want to reevaluate which health insurance plan that you pick. Obviously, taxes are only one variable of many variables that you need to take into account of what health insurance plan is best for your family. So do not just make a decision based off of, oh, what can I save on, how much can I save on taxes, but also make the best decision for your family. Obviously, everyone wants to save on taxes, but it's only one portion that needs to be considered when picking a health insurance plan for your family, for yourself. So definitely don't make a decision just based off of how much taxes you can save. So if a high deductible health insurance plan works for you, definitely consider opening up a health savings account, which you can open whether it's through your employer or separate from your employer. I strongly suggest that you do it through your employer because the amount of tax savings by doing it through your employer is substantially more than if you do it outside of your employer. And I'm going to be talking about that a little bit later. So what is a health savings account? I will touch on this topic in a different video in the future, so please hit the subscribe button so that you could get a notification when that video drops. I'm not sure when it will, but if you want to see it sooner rather than later, please comment below telling me that you want me to do a deeper dive on the health savings account. But in a nutshell, it is an account where you contribute pre-tax dollars and you're able to take that and use it for qualified medical expenses. So the 2022 contribution limits for single or a self-only health insurance plan is a maximum of $3,650 for 2022 or $4,650 if you are age 55 and up. This extra $1,000 helps those 55 and up that probably have higher health costs than somebody that is in their 20s or 30s. If you have a family health insurance plan, then that contribution is double, which is $7,300. Or if you are 55 and older, then you have that catch-up contribution of an additional $1,000, bringing your max total for a family health insurance plan to $8,300. On HSA is typically called in the CPA field, and a lot of people know it as a triple tax advantaged account. What this means is that you are able to save taxes not only on your contributions, which you're saving tax now, but it grows tax-free. And when you have to take the money out for qualified medical expenses, you're able to withdraw that money tax-free. So that's where the triple tax advantage comes from. You get the tax deduction on the way in, it grows tax-free, and you're able to take it out tax-free, which is different from the 401k and the Roth 401k retirement vehicles, where one, you get a tax deduction at the beginning, but the growth and when you take it out, you have to pay tax. And on the other hand, the Roth 401k, you don't get a tax deduction on the way in, but it grows tax-free and you're able to take it out tax-free. So the health savings account takes the best of both worlds and combines it. However, the contribution every year is a lot lower at the $3,650 and the $7,300 per year. However, it's a very powerful write-off for W-2 employees. The reason why I say and strongly recommend that you do it through your employer is that it helps reduce your W-2 gross wages that are subject to federal, Social Security, Medicare, and state income taxes, which is similar to the health and dental insurance premiums. So the fifth write-off available to W-2 employees to help save on taxes are the child tax credit. So the difference between a credit versus a deduction. We have been talking about a lot of deductions, a lot of write-offs that help reduce wages. However, a tax credit reduces your taxes dollar for dollar. So I have the same page 1 of an individual tax return for 2021. So you have your W-2 wages up here, and the standard deduction, the itemized deductions, they're over here. So you're deducting dollar for dollar of the wages. So if in that example, you have 100,000 of W-2 wages and you take the standard deduction then of $12,950, then you have $87,050 of taxable income that are subject to federal and state income tax. So an example to show what a deduction versus a credit is, a deduction is taken on this page 1. So your W-2 wages are going to go here, but not that 100,000 gross salary that you're taking, but it's less your 401k contributions, your health and dental insurance premiums, your HSA contributions. After those, this is where your W-2 wages are going to go to. So already you're reducing your W-2 gross wages of 100,000 minus what you're paying to retirement, HSA, and your insurance premiums. Then it goes down to the standard deduction or the itemized deductions, which further reduce dollar for dollar your income that is subject to tax. So then we get down to an amount that is your taxable income. Now we take into account, all right, if we're at a 10% bracket and our taxable income is $50,000 after all of those write-offs that we talked about earlier, then your federal tax on line 16 will be $5,000. $50,000 of taxable income times 10% is $5,000 of tax. So all of those above that helped it reduce down to get to our taxable income are called deductions because it helps reduce your income that is subject to tax. So a credit is way more powerful because it actually reduces dollar for dollar your tax owed, whereas a deduction only reduces your income. So the child tax credit available to individuals that have children 16 years and younger, you're able to take up to $2,000 per child as a tax credit to reduce your taxes dollar for dollar. And those child tax credits are going to be taken here on line, whether it's on line 19 of non-refundable, or it's going to be under line 28, refundable child tax credit. And again, this is going to help reduce your taxes dollar for dollar. So it's a very powerful and great write-off for W-2 employees. So I encourage everyone, have kids, they're blessings, but they also save you on taxes. So thank you for hanging in there. I know taxes aren't the most fun topic, but I wanted to give you a little bonus topic in addition to the 5 write-offs for W-2 employees so that you can maximize your tax savings. Again, nobody wants to pay taxes. It's your number one expense. So the more tax strategies that we're able to implement to reduce that cost, the better. So on to our bonus topic for W-2 employees, we're very limited to what tax strategies we can take. Yeah, we could take our retirement contributions, health insurance premiums, and what have you, but we're very limited. I highly recommend that not only do you hang on to your 9 to 5, your W-2 job, but start a side hustle or a business where you're making money by doing something that you like or something that you've always been wanting to start up. But don't quit your W-2 job, because that's your bread and butter. That's what helps pay the bills. This is just gravy on top. And on top of that, yes, you're making money, you're making income, but you're able to convert your personal expenses as tax deductions. So that includes cell phone, auto, computer, other equipment, microphone, your phone bill. So being able to convert your personal expenses as tax deductions, this offers another huge tax strategy that I recommend for everyone, because again, you're very limited at what tax strategies you can implement as a W-2 employee. Another very powerful tax strategy is beginning to start investing in real estate. I'm going to make other videos on side hustles, side businesses, and real estate, but this is just the tip of the iceberg, and I wanted to bring it in to this video, just showing that you're very limited at what you can do as a W-2 employee and what you can save on taxes. So please start your side hustle, start your business, start saving up, and start investing in real estate, because that's where it really gets fun. And if you want more awesome tax write-offs, tax strategies, tax deductions, personal finance advice, then please hit the subscribe button and stay tuned to our future videos that we're going to be hitting not only topics of tax, because tax gets very boring after a while. Please stay tuned for other topics that we're going to be hitting. And if you have a specific topic that you want us to do a deep dive on or a dedicated video on, please comment that below. And we read all of our comments. So if we feel that is a topic that we could really make a dedicated video, and that's what our audience wants, then we're for sure going to be doing that in the future. So please hit the subscribe button so that you could get our notifications. Also, it really benefits our channel if you become a subscriber. Also, visit our website, pgnaccounting.com. You could get all details of the different services that we provide our clients, and also where you can get our contact information to set up a free consultation today. Thank you for staying tuned till the end. I really appreciate it, and I hope everyone has a blessed day. See you at the next video.